Thanks for tuning into Stocks with Antonio. What a day on the market. A lot of green. The news was taken really well over the weekend, that there could be a deal with, or that there is a deal with Iran, but it looks like it gets wrapped up on Friday. So, in my opinion, we'll have to see. But the news coming out that there's a deal, it was taken well. A lot of green. Your portfolio is probably looking good. And we'll just have to see what happens. But be cautious because we got the FOMC meeting coming, and we got the new Fed chair speaking for the first time. And that starts June 16th through the 17th. And that's also going to impact the market, right? Investors want to hear what's going on with interest rates, what's the outlook. And if we hear that there's going to be a possibility of rate hikes and things like that, I think we could have a sell off. Doesn't mean I'm bearish. I am bullish, but we do have to face it. Inflation's ticking up. We got that new Fed chair. A lot of investors want to see rate cuts, and it looks like we're not in a situation for rate cuts. So we'll have to see the direction that we get from the new Fed chair. So stay tuned to that because that's going to be important for us that are investing in the market. Now, I wanted to talk about Serve Robotics, ticker symbol SERV. Recent, if you're subscribed to the channel or you've been watching my videos, you see me talk about this stock. I actually did really well with Serve Robotics back in 2025. Last year, I made a lot of money. This year in 2026, early on in the year, there's some movement in it. But now that we're halfway through the year, it's been going down for a while. So I've been getting some comments about it. Hey, do I think Serve Robotics is going to go up? What I think right now is you see some stocks that did well in 2025, they're not doing great this year, right? There's been some rotation out. Some other stocks have been taking off. So just keep that in mind. It doesn't mean that Serve Robotics isn't a good investment, but it is a small cap and it's a risky play. So just keep those things in mind with the small cap. It's not a profitable company. You're basically, if you're investing in it, you're either investing in it because you think there's going to be upside short term, or you believe this company is going to become profitable and grow with time. So you got to be patient. But what we want to pay close attention to those that have Serve Robotics in their portfolio is their next earnings, which is August 6th. That's going to be an important date because that's going to reveal to us how the company's doing. Are they continuing to grow? Do they have new partnerships? They're probably still not going to be profitable, but you want to see that the company's heading in a direction of growth and to eventually one day be profitable. So we also want to see the forward guidance on Serve Robotics. Do I think it's over for Serve Robotics? No, I still think there's opportunity. And as the price comes down, for those of you that may have not invested in it yet, it's, in my opinion, not a bad entry point, right? Especially under 7, which it was there not too long ago. Now, some of you that are watching this video may have got into Serve Robotics at a higher price. This is why I recommend use a stop loss. Okay, if you're playing Serve Robotics for the short period, meaning you're not into it for the long haul, you're just looking at small caps and you're investing in them to in hopes to make profit in the short term, you gotta be using a stop loss because your money, your capital, right? That's basically your tool to make your money grow. If you buy into small caps that are risky and you see them going down and you don't get out, what happens is you're missing an opportunity on something else, right? Because you're just watching this thing go lower and lower and lower when you could have avoided getting into such a deep loss by letting it go. Now, I get it. Some of you that are watching this, you have the fear of missing out because sometimes you get out of a play maybe and it runs up. You have to forget about that, in my opinion. You got to think about how many times if you would have got out, how that would have saved you from further losses and giving you an opportunity to do a new play. Probably more, right? So don't just get caught up on times where maybe you got out of a stock and then boom, it ran up. That's gonna happen if you're gonna stay in the stock game. If you're gonna stay in the game and try to be a short-term investor, a day trader, there's gonna be times where you get out of a play and it runs up. It's just gonna happen. It's unfortunate. Nobody likes it, but it's just something that's gonna happen. But you just got to get more in the habit of protecting your money. So make sure you're using a stop loss and also understand that when you're playing small caps, they're risky plays. If you're investing in the stock market and you're trying to invest short term, you can lose all your money. I'm not a financial advisor, so I can't tell you when to buy, when to sell. I'm just sharing my opinion with you, what I'm doing, what stocks I like, where I see opportunity. But there are stocks that did really well, in 2025 that right now they're not so hot. Investors have rotated into other things. So even though the SPY has been going to new highs and we've been hitting new records, not all stocks that you've been watching may be running up with the market. Some stocks that were running up last year, this year, they actually been going lower despite the market going higher. And I just wanted to let you know that doesn't mean that these companies are no longer good. If the company's fundamentals are good, and if the financials are showing improvements, eventually the stock price will move to the upside. But you got to just stay on top of those earnings calls, stay on top of the company, see how it's doing. Because if those earnings, when they come out, you see that the company's actually getting weaker and it's been selling off, it's going to continue to sell off. Now, if you see during the earnings that the company's improving, good forward guidance, the numbers are improving, even if it sells off for some reason after earnings and the short term, if the company's doing well, the stock price will eventually move to the upside. That's just what I've seen in the stock market because I know recently there's stocks that they have their earnings and then they sell off. Nobody knows why. But if that company has good earnings and it has good forward guidance and it continues to grow and continues to improve, then you just got to be patient with it. The stock price will follow with it. Now, that's just my opinion. Remember, again, I'm not a financial advisor, but I wanted to talk a little bit about Serve Robotics. I know some of you that watch this channel have it in your portfolio and a little concerned with it going to the downside. So stay tuned. Let's see what August 6th reveals on Serve Robotics. And then you'll have to make a decision if you want to increase, get some more in DCA as the share price is down, or if you want to exit that position and look for new opportunities. Let me know down in the comments below if you have Serve Robotics, what's your outlook in these markets. If you haven't done so, hit the thumbs up button and hit the subscribe. Check out the link in the description box. And like always, thank you so much for watching, and I'll see you on the next one.